All right, welcome back to Road to Retirement. Tony Marlette Jr., or as I'm known around here, not Chris Anselmo, and Tony Shore out at Gradient in Minneapolis. Hey, Tony.
Hey, I like that. Not Chris Anselmo. I'm gonna start calling you for that
Yeah,
from now on.
there's only two employees at Brookside and Anselmo. It's Chris Anselmo and not Chris Anselmo.
I get it. I'm like, "Wait, 2? You've got a full staff there," but, it's Chris and not Chris.
Exactly,
Yeah,
exactly right. Yep.
that's funny. That's funny. Well, Tony, how have you been? Are you keeping busy?
Unbelievably busy. We've been meeting with a lot of people. We're still, it seems like we get tax season, which is obviously
Yeah.
taxes. We get pretty busy after, but then not. It's been just so steady and so consistent ever since then.
Interesting, because summer's usually the slowest time, isn't it?
Summer is usually slow for financial people. Obviously, you have families going on vacation, people spending time with their kids
Yep.
that are not in school. So yeah, I mean, typically it's been a slow season, but I think with us it's a little different because once spring comes, April 15th, April 20th, we start meeting with people based on conversations that we had during tax season. So it's a good boon to the business.
Yeah. Yeah, I think that's great, and it's good that you guys are busy. I know you provide so much for your clients there. It's no surprise to me that you're busy, and you do so much from estate planning to financial planning to retirement planning, tax planning. So you've got it all there under one roof, and I think that's what people need. But today, what are we talking about, Tony? What do you want to cover today?
We'll go over how to benefit and how to handle, and really what to make of the interest rate cuts that are in all
Oh.
likelihood coming in September.
Interest rates. Oh, I hope they cut them. They've been incredibly high. I know, my wife and I would like to move. We've been in the same house for a long time, and now that our kids are moved out, this just happened recently. We're pretty much empty nesters now. Our last youngest is in college, but the interest rate. We're not gonna look at buying a house until the rates come down.
Well, good for you guys for waiting. It's a really disciplined approach if you can take it. I don't know if you remember, my wife and I moved almost exactly 1 year ago today.
Yes.
And, we wanted to jump on a good opportunity. We
Yep.
we had the baby, we got another one coming. And, not that we couldn't wait. I maintained for a long time that we're going to wait, we're going to wait, we're going to wait. The right place came along at the right opportunity and we had to grab it. Interest
You needed the space too, let's be honest.
interest rates be damned at that point, I guess.
Yeah,
I do respect the process of, let's wait until rates start to come down. And that's what
sure.
things that I was going to bring up today was ways to benefit from interest rates going down. So people will think of like, my CD rate is going down, my money market rate is going down. Where can I benefit from this? You hit the nail right on the head. Your mortgages are not going to just get, cut in half automatically with lowering it.
No.
But this is the start of people being able to take advantage of potentially getting not only a house at maybe a lower cost, but also a lower rate on the mortgage.
Refinance your mortgage, yeah.
Exactly. Yep.
Yeah, when the interest rates do drop and mortgages do go down, we could take advantage of that by refinancing. Just like you bought your house, interest rates were very high. However, you're gonna wait, and when they go down, you'll be able to refinance at a lower interest rate.
It made such a difference to me. Our old house that we lived in, I had like a two and a quarter. I did a refi. I think we hit rates really at the low, 2.25%. I kept that house because the mortgage payment was so low.
That's incredible, 2 and a
I,
quarter. I
yeah,
thought
I,
we were doing good at 3,
right.
2.9 or 3 is
It
where
was
we're at.
unbelievable, the timing that we just nailed it on the refi. So it was so advantageous that I kept the house
Mhm.
as a rental. And then we have the new one. Obviously, the new one, the interest rate's in the sevens. It's sky high. But, like I said, timing, there really wasn't a lot we could do about that.
Sure. Sure, but keeping the old one because it's at such a low rate, that's interesting that you were able to do that and, rent it out, so
Mm, yeah, yeah, it's been a good experience. It's a lot. I've done a rental before when I moved out of state. It was done fairly hasty. I did not have a good experience the first time, but this time I was able to take my time a lot more. Got really good tenants in there. It's been
got the
good
right
so far.
people in. You gotta
It
have the
makes all
right
the
tenant.
difference.
It makes all the difference, yeah.
You're right.
Yeah, my dad's renting out the houses on the farm that he inherited from his dad now that he can't live out there, and, yeah, it's it's a lot of work being a landlord and having rental property, but it can be a very good investment.
Yeah,
Yeah.
it's like running a business. Like we all make Chris and Selmo look really good here. So
We like to pick on Chris, poke the bear, the boss, of the operation,
of
but Chris is
course.
sharp guy.
Oh,
That's
he is
yeah,
very sharp, yeah. There's
yeah,
no doubt.
he's a great guy.
Yeah.
Yeah, I love working with Chris, but we like to have some fun, and I like doing the show with not Chris Anselmo
Yeah,
as
see, I'll
almost as
change.
much as I do with Chris Anselmo. So,
That's
yeah.
right. That's right.
So interest rates now people for our listeners out there to follow what's happening is obviously interest rates are still high because the Fed had raised interest rates over the last few years to try to combat inflation and slow down spending, which it's definitely worked. I think it's slowed down the housing market somewhat, and inflation is now down to under three.
Mhm.
So we're headed in the right direction, correct? But the rumors are the word on the street is the Fed is going to lower interest rates coming up, right?
Yeah, that's correct. So I think it's just about a certainty at this point. We have I think it's low, but there's like a 70% consensus that we're going to have a rate cut in September. And to your point, the Fed's goal with inflation, it's going in the right direction, but remember, the goal is 2%. So if we're at 2.9, we're still 50% higher almost than where we need to be. And this has taken, as you and I were talking before we went on, this has taken a long time. So
Yeah.
it doesn't just happen. You make really bold moves. That's a great way to totally send the economy in the tank. So it's got to be a process here, and a quarter of a point, or 25, 0.25% is probably what we're in for in September. Um, People have been plowing money into CDs, savings accounts, fixed annuities over the last few years and really been reaping some of the rewards. So when these rates do go down, those instruments are not going to be as advantageous. However, there are going to be some areas where it is going to be a positive for the economy and for investors, and that's the whole point, whole purpose of doing it.
Yeah. Yeah, there you go. So, what I take from that, what I gather is the Fed will probably lower interest rates in September, coming up soon, but they'll probably only do it incrementally, very small amounts at a time. They're not going to drop it by a whole full percentage point or anything.
No, I would say I at the very I mean, maybe a month ago, I heard some people saying a 0.5%. I don't think that's going to happen. I think that's probably too bold. And, we have an election coming up. They don't want to be seen as meddling in the election, although you got to think people realize that, the Fed's doing this. This has nothing to do directly anyway.
With the administration.
Correct,
Yeah.
exactly. But it's all about optics a lot of times. So, and I get that they may not want to, but I've always been a believer that you do your job. If your job is the dual mandate, stable prices and
Yeah.
low inflation, then you have to do what's best for that, not the election. But I get the people that are concerned about the election too.
Yeah. Sure. Sure. So we think maybe a quarter of a point,
Yeah,
probably.
yeah, I would say a quarter of a point. And you mentioned mortgages before. The mortgage industry will benefit from that. I think the most interesting component of this investment wise is the effect that it's going to have on bonds.
Oh, really?
So
Okay.
yeah, I mean when interest rates go down, bond prices go up. The interesting part of that is when bond prices go up, bond yields go down. So the people that have been collecting income on, say, a high yield bond fund or anything affiliated with, say, a short term treasury,
Mhm.
your yield has been at a I don't know, it's probably a 10-year high. People that are relying on things like that for income, that's not going to be the case going forward. However, if you are a bond holder in, say, your investment portfolio, you're going to start to see bonds acting more like bonds for capital preservation purposes or for stability. It's not really capital preservation, but stability purposes. So, slow and steady is the name of the game with bonds traditionally. That has not been the case over the last few years. I think that will happen once rates start to come down.
So basically, to put it in layman's terms for our listeners out there and viewers, bonds are starting to normalize a bit. And this might help them because for a long time, bonds used to be when the stock market dips like it did in 2022. Typically, bonds are where you have that's why you do the 60/40 rule because bonds are usually safety. And when the stock market's down, bonds do typically better, but that hasn't been that way. Bonds have been terrible for the last few years. Like over the last 4 or 5 years, bonds have not been doing well. But now we're starting to see bonds improving, right? And they may normalize now and start to fulfill that role they used to, right?
Yeah, absolutely. Speaking of, you brought up the 60/40 portfolio. We've been filling in the bond portion with equity fixed index annuities. So,
Sure,
you get the market performance, it
because you
doesn't
need the
drop.
safety. You
Exactly,
need the
you need
safety.
safety, and, our pals and portfolio managers and partners over at Gradient, they've been all over it with, here's what the bond portfolio needs to look like. I looked at their bond offerings, a couple of clients shifted some over into bonds within the last month or so because they're on top of it as far as, long-term bonds are gonna start looking better as the yield
Yes.
curve normalizes, so
Yep.
they've been shifting those over from the short term to the long term and from high yield into more high quality to take advantage of these perceived rate cuts.
Sure. Plus, I know one way that Gradient Investments has helped you and your clients with their investments combat the weak bond market and deal with market volatility is by offering a buffered index portfolio as well, where you have downside protection and it's a portfolio where
Yeah,
you participate in some growth, but you get downside protection if the market drops 10 10 like it did the other Monday, you don't have to worry if you have money in that buffered index portfolio, you don't lose a thing.
you're absolutely right. Those have been huge for us too, and, I think another thing that sets those apart in particular is you don't have to take on a 3, 5, 7, or 10-year time frame. You can do it for as little as sometimes 12 months, most of the time 18 months, a year and a
Sure.
half at a minimum. And there are offerings that they have now that have 100% protection. So,
Yeah.
it's really interesting the combination of investments and things that they can do. They hedge, zero coupon bonds, options contracts, which are really just derivatives, but they put those together all in a portfolio, make them work for you, and you get the end result as the investor.
Yeah. Yeah, and I think it's great that investment firms and fast-growing firms like Gradient Investments, which has been around for a while now, but they manage over $6 billion in assets, and act as a third-party money manager for a lot of advisors across the country. But I think it's great. Even insurance companies out there are offering better and better products and investment opportunities. Even insurance companies with, like you mentioned, fixed index annuities. These aren't your these aren't your grandfather's annuities. These aren't your dad's annuities. These are like really souped up, more for the consumer with benefits for the consumer. It's not like the old days where you just got a variable annuity and you'd pay high fees, and if the market dropped, you lost money as well. Now there's principal
Oh
protection,
yeah,
no
yeah.
fees. I mean, it really has changed, and hybrid policies where you can get long-term care coverage. And I mean, there's just so many options out there now, aren't there?
Yeah, I mean, you really nailed it. It's such a competitive space, and you can see
Yeah.
the innovation with some of these in real time. So you even have fixed index annuities now that will allow you to take a little bit of a loss only on the earnings, not on your principal, only on the earnings, so you can get a little bit higher cap or a potential higher return in subsequent years. So you can literally see the innovation with these happening in real time.
Yeah, that's great. Well, and I'm glad to know that there's options and you guys look at everything for your clients because every client is different. For some clients, bonds aren't going to work. For some clients, annuities aren't the best idea. For some clients, you as they get closer to retirement or in retirement, you don't want it all in the stock market. So I know that you look at the big picture for your clients and can do the same for our listeners. So before we go, let our listeners know you're offering a no charge, no obligation consultation, right? They can come in, get a consultation. You can look where they're at, and people should be getting a second opinion on where they're at financially, or maybe they don't have a written financial plan in place. And in that case, get a first opinion.
Yeah, that's right. We do offer the complimentary consultations. Mention this podcast, or just call in and tell everybody which Tony you like better. And depending on your answer,
Yeah.
we either charge you nothing or charge you double.
Yeah. Yeah, that guy is the one you wanna say if you wanna get the good deal, that's for sure. I'm just along for the ride as the co-host.
Oh, you're
It's
good. We wouldn't be able to do this without you. So
it's not Chris over here, you know?
yeah,
Yeah,
not
yeah,
Chris.
yeah, 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 there you go.
Yeah,
So, yeah, and if you say nice things about Chris Anselmo, you'll really get a good deal. There you go.
that can only help you. That can
Yes,
only help you.
exactly. Exactly. Well, Tony, great show today. Is there anything else you want to add? Why don't we give our listeners that phone number? Read
Yep.
off the phone number and web address for our listeners out there.
Yep. Brooksidetax.com is the web address, and our phone number 440-886-3550. Call us. You can schedule the complimentary consultation. You can go online, schedule that as well. Let them know that you heard us on the podcast. Our YouTube channel is getting more and more views all the time. Our Facebook page, we kind of keep a little bit lighter and keep everybody up to date with events that we're doing, and of course, with our partners over at Gradient as well.
Yeah, and for YouTube and Facebook, just for our listeners out there, it's just at Brookside Financial. So that'll get you there. The at symbol and Brookside Financial, or go to the website, brooksidetax.com. Check out the show page. You can listen to this show, past shows, or subscribe to the show on one of the podcast sites. We're on all the major sites, Spotify, Apple Podcasts, Amazon Music. So,
That's
uh,
where I listen, is Spotify. So I
yeah,
always, on my Spotify, it'll come up every time a new road to retirement. Since I
yeah.
subscribe to it, it'll pop up in my Spotify.
Yeah, that's great. Well, hey,
Yep.
great show today, Tony. Listeners, thanks for tuning in. That does it for today's episode of The Road to Retirement with our host, Anthony Marlette Jr.
Thanks, Tony. Thanks, everyone.